Thanks, Catherine. Like other deputies, I listened with incredulity this morning to the speeches of Minister Noonan and Taoiseach Kenny. Both speeches were full of contradictions, revolving around self-praise for the beginnings of fundamental reform of our corporation tax system since 2012-2013, and a total refusal to accept that certain foreign multinationals were heavily favoured by Irish finance acts down through the decades since the 1960s. The Taoiseach waxed lyrical indeed this morning about the importance of the 187,000 FDI-supported jobs for our people and the sterling work of the IDA since the early 1950s. And of course, nobody can deny the huge importance of that investment and the contribution it's made to transforming the lives of ordinary Irish families. And I've listened to the Cork deputies with interest, of course, about the contribution of Apple. But the general disquiet that constituents have felt over the years about the hugely favourable taxation of high net worth individuals and companies included concerns, grave concerns, that Fianna Fáil and Fine Gael-led governments were permitting massive multinationals to turn Ireland into a tax haven in finance bill after finance bill down through the years. Even long before the 1991 and 2007 revenue tax opinions on the operation of the Apple companies, I recall the Sunday Independent publishing a detailed investigative report on a prominent Californian IT company based in North Dublin. That report clearly showed that transfer pricing was being effectively used by the company and its affiliates in the Netherlands and an offshore location to greatly minimise the Irish and United States corporation tax bills. The useful reports on the Apple Vestager judgment prepared for us by the Department of Finance seems to indicate that up to 300 companies based in Ireland have been looked at by the EU Competition Commissioner, and that no further action may be taken on foot of these examinations. But the sterling investigative work carried out by editor Ian Keogh and his colleagues at the Sunday Business Post concludes that around 6 multinationals at least six, struck sweetheart deals with the Irish state in the early 1990s. And as the motion in the name of my colleagues and myself clearly states, this House should now be given all the details of every one of those deals and all similar information on the 300 tax examinations referred to above. I was a member, like yourself, Catherine, of the Public Accounts Committees of 2 Dáils, and on many occasions raised the issues of the volume of outstanding taxes and the numbers of companies and corporations involved. Clearly, the levels of secrecy, allegedly on commercial grounds and to protect the work of the IDA surrounding the Apple and other deals, and the deliberately obscurantist framing of finance bills has withheld key information on the huge tranches of tax revenue deliberately siphoned away from the Irish, American and other European peoples over recent decades. When we requested information on the cost of FDI jobs from the relevant departments and agency, it's clear that taxes deliberately forgone and serious tax expenditures were not factored into the equation, and we weren't given the information, as you remember, Catherine. And if we examine our creaking health, education and welfare systems, our grossly deficient housing and transport investment over the decades, it's clear that a truly fair and transparent corporation tax system would have significantly enhanced these resources for our people. That's why we clearly now should accept the Apple ruling and move on, putting the 19 billion or whatever into the escrow account until Apple's own appeal is decided. I welcome the review of the Corporation Tax Code promised this morning by Minister Noonan, which he said is intended to ensure that Ireland meets the standards of the OECD base erosion and profit shifting, the BEPS project. And according to the Minister's speeches over the past year, the very appetising, the double Irish and Dutch sandwich can no longer be served up to giant multinationals like Google. Our new knowledge box half-rate corporation tax seems also to meet international and OECD standards. Given these improvements in transparency and the explicit statement by Commissioner Vestager that this decision doesn't call into question Ireland's general tax system or its corporate tax rate, it seems incredible that Ireland is appealing the Apple decision. It's outrageous, of course, Catherine, that we don't have the full Apple ruling in this House, and it's very, it's treating this House, I think, very badly. But the reality is the Commission report does seem to clearly indicate that Ireland did do a special tax deal with Apple Inc. and its Irish subsidiaries. Of course, other Irish states, other EU states rather, and states close to the EU, including the Netherlands, Luxembourg and Switzerland, also facilitated joint multinational companies in return for investment and jobs. Indeed, of course, Catherine, like you probably appreciate, it's highly ironic that the President of the Commission, Jean-Claude Juncker, he led the Luxembourg government for many years, which facilitated massive tax avoidance and indeed probably tax evasion revealed in the LuxLeaks disclosures. The governments of France, Germany and sometimes even the UK in particular have looked in envy for a long time at the concentration of American high-tech companies in Ireland. That's why the reputational damage done to Ireland by the Commissioner's ruling may have very serious consequences as the larger EU states seek to continue to try to circumscribe the smaller states' competence in the area of taxation. Those large states, of course, ignore the profound cultural and indeed family connections between Ireland and the US, which continues to make Ireland within the EU a very comfortable home for US investment. Indeed, Apple has given reassurance on its plans to maintain its major Irish presence, come Mr Cook says what may. But we do need to ensure that multinationals pay their fair share of taxation in the country where economic activities takes place, and that any offshore elements of sectors like our financial services and marine regulation are urgently addressed in the coming finance bill.
Tom Neville.